Hello, everybody, and welcome to our market update for the 11th of January, 2026. All right, it is about 12:30 p.m. We've got a lot to cover today. Of course, we've got the markets and we've got lots of news coming up. We've got earnings coming up. I want to talk about the UPS trade, uh, the Google trade that I had very, very similar kind of look. We'll talk about all those things, but let's start where we always do with the Nasdaq. Now, you probably will note that I've got a couple of different indicators on. I'm going to explain to you what they are and why I'm looking at those. So you're familiar with the Lux Algo point of control, and I find it interesting now that on the Nasdaq we're right in that point of control. So if you look in, I'm going to zoom in, and if you look to see where we are right near the upper end of that band of the point of control. What I find interesting is that we've got this high here, this high here. We drew this trend line in last Sunday. There's that Friday bar. And we had created a bit of a wedge. You can see there's a low, there's a low, there's a low. We had created this wedge. We stepped out of it momentarily on Wednesday, came right back into it, and we're trying now to overcome this point of control. So let me pause here and let me tell you what the new indicators are. This is the Stan Weinstein stage indicator. This is a free indicator that's available through TradingView. If you just search for that, you'll find that here. So this kind of gives you an idea. So the Weinstein concept is that if price is above the 30-week simple moving average, or the approximate for the daily would be the 150-day moving average, that it likely is a long, or it will get into a long position. You should be looking for longs. There are certain other guidelines as well that have volume, etc. That's a much uh, there's a much deeper conversation that's required for that. Of course, the book is very, very good. If you don't have time to read the book, you can certainly put this into an ChatGPT or Gemini, Claude, etc., and just get a basic concept for what a basic idea for what the concept is. So I'm going to remove the volume here because that's not going to be relevant for our discussion today. But I am going to leave on this area here, this indicator here. This is the 30-week simple moving average, and it also has the 150-day simple moving average as well. So this is just another indicator. It's not something I created. If you hover above it, you'll see Stan Weinstein's 30-week moving average. Okay. So let's close this off. And now with this, let's have a better look. We had drawn in this arrow about 3 weeks ago, and we had drawn in this arrow about 2 weeks ago to show that this is what I was expecting. So this arrow did work out. And this one you can see, we never broke that high. So we come back down, we get right in that wedge. And we're now looking for a breakout here with earnings coming up. So one thing I wanted to point out, we're looking at lower high, and I believe we now have a higher high on this very clear 3-bar pivot. So there's the high on the 3-bar pivot, but the high comes in at the point of the point of control and the upper end of that range. So with earnings coming up, it's an important time here for the Nasdaq. We've got bank earnings next week, and then the tech earnings will start the following week. Netflix usually is one of the first ones to report. So what am I looking for here? I'm looking for a very clear break above this level here. And if we can sustain that break, I am looking for more upside on the Nasdaq. So let me get rid of this one because we don't need this one any longer. And we're going to get rid of this one as well because we no longer need that. So this is the level that I'm looking at for more upside on the Nasdaq, 627.67 on the Qs. The Nasdaq will have a very similar look. If we get that, then I think we can move this arrow across and look to get back to those previous all-time highs again. So for me, order of the day for the Nasdaq is to watch and wait and see if we break above this point of control and then can make our way to all-time highs. If we look at the S&P, and there's, you can see we clearly have been above that Weinstein indicator for quite some time. In fact, you can see on this move here. So let me get rid of some of these things. We were using this for programming victory 3. And there we go. So there's the velocity long. It comes in a little earlier than the Weinstein long. But as I mentioned, the Weinstein long, there is a very significant volume component to it. So this is not just if it goes above the 30-week, this is a long. There are certain other guidelines. And again, the book is the best way to understand it. If you don't have time to read the book, then at least uh, the LLMs will give you an idea. So there's my long here on velocity, but my long really doesn't come in until we break a previous pivot high that's above the ribbon. So there's the previous one. We don't get close to it. But what happens after the 8th of May is that we establish a new pivot high right around there. So I would draw my trend line there. And then when we get a break above and a close above, which happens right on this bar here on the 3rd of June, that's my entry. So what's my stop loss here? I would probably go down to, in this case, I want to be within 5%. So remember my rules for ETFs, 5%. So 5% of 527, it's about 20, you know what, it's probably about 27 points or so. So down to 500, are we within that? So 487, that's a little much for me. I would use the ATR here for my stop loss on this entry, on this particular trade here. Let me get rid of this one here. There. So now we've got 30-week moving average, the Weinstein. We've got the 3 ATR, and we've got the bottom of the ribbon. The bottom of the ribbon for me is a little too much room for me to give the trade to breathe and work itself out. Of course, in hindsight, it does. But this is, I would put my stop loss here within that 5% range. If you can tolerate a bit more risk, then the bottom of the ribbon is where I would consider the trade, excuse me, the stop loss. And in this case, we just happen to have the Weinstein average, and it does intersect with the ATR. So there is a bit of strength and a bit of support here on the way down. But we never actually get close to it. We don't actually get a close below the ATR until October. So the trade entry comes sometime in June, and we don't get a close below. It was June, right? No, it was a little earlier. It's May. I'm sorry, it is June 3, and then we don't get a close below the ATR until October. So that's the way I'm following these longer term trades on velocity. When there's a chance for a re-entry, I'm looking for, and this here is a little bit of Heikin-Ashi, it's a little bit of moving average, it's a little bit of oscillator. So I'm looking for re-entries like this. Now, the one thing I have noticed is when I get this green signal here and we're above the ATR, that's the trade I want. I don't want one that is below the chandelier exit. And my rule generally is if these things don't match up within 2 bars, I generally will ignore that trade. So this one just happens to occur on the same bar. So this would be a re-entry for me here. So re-entry here, stop loss there, take profits along the way, and then you get closed out just about where you got it. So there's the entry, there's the closeout. It's a break-even trade if you did not take profits along the way. In this case here, this re-entry, you can see it is actually above the ATR, and you would actually get closed out the very next day. This is not a short for me. Again, I'm looking at the overall tenor of the market. I'm still looking for long trades. And here's an example of what I was just mentioning, that when I get this re-entry, you notice it's below, the price is below the chandelier, but we now get a trend change on the next bar. So I want to give myself no more than two green bars, two green blocks for a re-entry here. So this is my re-entry. I'll take profits along the way, and then we get a close below the ATR. Next one we get in on, it's right there on the 22nd of December, and that trade for me is still would still be active. So that's sort of what I'm looking at for longer term, and then down here for re-entries. And there are some re-entries that are a little bit more powerful looking, and you can see that from the chart. So the three indicators that I'm currently using, the ATR, velocity, and the Weinstein stuff I've been tinkering with over the weekend. It's something that I think at least will give you a starting point of where we are in the cycle. If you look at something like PayPal, or as Sandy had mentioned, Meta, you can see that those PayPal certainly is in a bit of a decline. And you can see that there. So this one, I would wait to see if we can break above that 30-week or 150-day moving average before looking for any longs. Now, the most interesting one from that I found on my watch list using the Weinstein indicator is Disney. Disney looks like it's kind of just getting over that or doing the consolidation. Previous stage was stage one. And if you do a replay here, you can see when the stages actually change. What I'm going to do is I'm going to take this indicator, that the Weinstein indicator, and I'm going to see if I can make an enhancement to it so that when you hover above a bar in the past, that it will show you what stage it was at that bar. Because instead of doing a replay, which is very time consuming, I want to see if we can make this a little bit simpler so you can see when the stages change or when the stages transition. If we go over to the S&P, this one looks a little bit better than the Nasdaq. You can see that Friday close emphatic, and we did close at an all-time high. So this to me is very, very impressive. We had drawn this wedge in, I believe, was it there's the 7th? I think we had drawn it in there. So on the last Sunday video, we had drawn in this rising wedge, and you can see stayed within it. We're still within it here, but the point of control is now below. So this area will provide a little bit more support, or this band will provide a little bit more support. But this one to me looks a little bit more clear for all-time highs. So is this within my risk tolerance for the stop loss? Let's see. Closing price here, 694, 675, 30 points or so. So this one, yeah, would be, but my re-entry on this would have been right there on the 22nd of December, same as the day that we had on the Nasdaq, but this trade is still, excuse me, this trade would still be active here. So that's S&P. Russell, of course, much more volatile, but all-time highs reached on the 11th of December, close above yesterday on Thursday, and then follow through. So this is a breakout. If I was trading it here, so my re-entry, let's go back. There's the green bar. Does it happen within two? No. So if I were to do this in the most mechanical way, this is not a trade that I would take. I would wait for another opportunity. But this is a breakout. So if I were to play this breakout, I would take my entry here at 260 and put a very, very tight stop loss and put it at the previous all-time highs, which comes in around 258. So it's very small. It's about 1% or so. But if it can hold that support, then I think you've got blue skies ahead. Let's go over to good old gold futures. And I was looking more at the options pricing for gold versus silver. Gold still seems to be much more reasonably priced than silver. I'm going to show you that on some of the think back stuff that we'll do with the options. So I still like gold here to the long side. I still like my XGD. I added a little bit, as I mentioned to you last week. I added a little bit of SLV last week as well. And that's the next level I'm looking for here. 75.16 on SLV and on silver futures. There's that previous high around 82 or so. So it looks like we've gone into a bit of a consolidation, which is not uncommon when you've had a big move like this. So I'm expecting a break above this 84 in the next couple of weeks or so. You can see we have drawn in a bit of a channel here, so we may just bounce within this channel between 83 and 70 for a bit, and let's see which way we break. If it's above or if it's below, then we may consider shorts, but right now there's no reason to consider shorts. Looking at the Weinstein indicator, you can see that we had this, it's a little hard to see, but it's right around there. I want to say on the 11th of April. And then velocity gets you in right around the 23rd of April. The more conservative entry for velocity, remember, I've got to break a previous pivot high, which comes in right around there. So I don't break that, but I establish a new pivot high there. Okay. And then this very clean breakout happens on the 2nd of June. 34, and if I go down here, 32, and for ETFs, remember it's 5%, SLV or silver futures, you can, this one, you can go up to, I'd go up to 10 on silver futures when a breakout looks like this. You can even put, I would even consider putting my stop loss here, but for me, the mechanical stop loss is right there, the ATR. So from 34 to 32, that's certainly something that I can tolerate. And that trade keeps me in until 36. And then we get back in. There's that re-entry. Gets back in at 38. And then that trade, you're in until 47. We get back in at 50. And you can see we test the bottom of the, or we test the chandelier, never close below. So from 50, still be in the trade today. So silver, just trade after good trade using velocity and using the re-entries on velocity. But silver has been an easy play. We've done quite well with it over 2025. Right now, I think we're at 75.85 on SLV, 70.80. So that is the current position that we have for June. Okay. Let me see where I want to go from here. Go back here. There we go. Bitcoin. I last week when we got into this 94 range on the Monday, I thought, oh, okay, I think we may be turning a corner here. You can see that if I'm keeping that rule strict of no more than 2 bars before a re-entry, this is not a trade I would have gotten into. This sort of is fading a little bit here. We're in that point of control, which is encouraging if you're a long Bitcoin player. But I need to see it break above the ribbon here at 99,000, call it 100,000 here for me to start considering long positions. But I do like this consolidation. And you can see here, if you're using the Weinstein indicator, we're still in that decline, but that can change quickly with one day of upward move and good volume. So Bitcoin, uh, wait and see or watchful waiting is the order of the day for me. Okay. Economic news coming up this week. Big week for news. We've got CPI on Tuesday. We've got PPI on Wednesday, but more importantly, I think Wednesday could be interesting because the Supreme Court should provide a ruling on the tariff situation. And I've been reading more about it. which way are we going to go? Even if, if the ruling is that these tariffs are uh, not allowed, what do we do? How does the market react in that case? Friday, when the Supreme Court did not come out with their decision, the market sort of liked that and felt that, okay, maybe the delay is actually a good thing. So Wednesday will be an important day for me in terms of where we go with this market. We can have a complete breakdown. But if the news is, hey, these tariffs are okay, I think we'll actually go up. If the news is these tariffs are not allowed, I think the Trump administration certainly has other means by which they can accomplish the same task. So Wednesday, I'm going to be watching that news carefully. Thursday, jobless claims. So again, more volatility could be in store for us for this week. We also have earnings, and we've got Delta on Tuesday, and we've got most of the bank earnings coming up this week. We've got Regions, Citi, Wells Fargo, Bank of America, Morgan Stanley, Goldman Sachs, BlackRock. So these are generally the first ones to report. So bank earnings will be interesting. If I look to see where XLF is, this has had such a good run over the last little bit that if you look to see where we were on Liberation Day and see where we are currently, we're up 30% on the banks. Goldman Sachs, hard to believe that it's near $1,000. Uh, and this doesn't seem like there's any stopping it. Now, earnings will be interesting. If we go over to Polymarket and look at, I was mentioning to you, was it Citigroup earnings that took a bit of a dive on some, yeah, so there we go. So generally, my experience with Polymarket is that for these earnings plays, people are generally very optimistic in terms of whether these companies will beat the earnings number. So these numbers are all based on consensus EPS numbers that they have to beat for this binary option to pay off. But I do find this interesting that we've gone from what was a foregone conclusion at 92% on January the 5th down as low as 28%. This is where yes, we were speaking right around here, around 2 p.m. or so on the 9th. And we've come back up a little bit to 43%. I mean, this is not a heavily traded contract. It's only got $13,000 in volume, but I do find it interesting that this has taken such a dive. If we look at Goldman Sachs, and you can see here, took a bit of a dive. This one looks much more pronounced. It actually went only from 80 to or 91 to 76. But we've now come back up here. So look at this probability distribution. And if I think Polymarket is not allowed in the US as far as I know. Kalshi, I think, offers something similar, and they are registered for CFTC through the CFTC. Look to see where the best opportunities are. It may not be with your current broker. It may be on something like a Polymarket or Kalshi. Or at least I'm using Polymarket. You can see I don't have an account, but I'm using this as a bit of an indicator in terms of what I think is, yes, it's a bit of a gambling mentality, but I also think that this platform is so ripe for being gamed that people with insider information are certainly trading here, and the pricing reflects that. So the transparency of this market, I do appreciate. And this, looking back at some of these charts, uh, you'll get a pretty good idea of what not only the general public is thinking, but what some of the smart money is thinking as well. Now, Luis had asked me to look over or to talk about our UPS trade. So let's go back and look at our UPS trade. which was initiated on the 18th of December when the price was around 101 and change. So let's go to the 18th of December. And yeah, it was right around here. So this is usually a day later on the Think Back feature. So start with a chart on UPS on the 18th of December. Now, I've talked about this, that the proper reentry for this trade would have been here on the 25th of November. But when we got the velocity long on December 11th, I was waiting for the ATR, or the chandelier exit, to start catching up with the price so that when I got into the trade here on the 18th, that I was well within my stop loss limit. So 101 down to 96, it's within that 5%. So there's my entry. There's my stop loss. I'm not using this. I'm not using this. I want to stay within my 5% stop loss area. And if I put on my pivots, close that here. So from this entry on the 18th, my first target would have been right around 104, but that's not really going to do anything to move my option position. So I was actually just targeting 110 as a nice round number. And I thought if we can get to 110, the risk reward on that 10 wide trade that we had, so it was on 110, 120, and it cost us $1.82. The spreads were not highly liquid, but they weren't that bad. So 182 for a 10 wide, and the way UPS had been moving, I felt that we could get to at least 110 quickly, and then perhaps even a little higher. So the plan here was, as it got to 104, 105, was to start taking profits along the way. And I think we have done that twice on UPS. So there's Jan 7th, there's Jan 8th. So we have taken two sets of profits on UPS. So the setup on UPS was March. Give myself enough time for this trade to work. There's the 110, there's the 120, one contract each. And you can see the price was right around that 185, 190 that we got in at. And as the price, and here you can, let me just talk to you about a little bit about the theta. I'm sort of obsessed with trying to minimize my theta. I think I've got enough of I've got a good system that is good at predicting direction, but it's the speed that always concerns me. So while I'm waiting for the stock to do what I want it to do, you can see we actually had a bit of a drawdown. So from the 18th to the 5th of January, so 1, 2, 3, 6, 9, 10 bars, 11 bars, the price really didn't do much. So if I had a short-term expiry on this, a 30-day expiry, or just a simple call option, and I'll show you what this looks like on the 6th of January. So let's go to the 6th of Jan. And you can see if I had just the simple long call on the 110 on that date, I'd actually be down, looks like about 20% or so. And in this case, I'm down $20 on a risk of 190, about 10%. So I'm okay with somewhat limiting the upside, because I want the trade-off of less decay as I'm waiting for the trade to do what it's going to do. So that's why I chose this 110, 120 call. I knew we could, or I predicted we could get to 110 probably by the middle of January. 120, I didn't know, but now that we are near 108, 120 doesn't seem all that far. There's that next market maker pivot. 111, 116 is the following one. And 120 takes us right to that R5. And above the R5, if we can overcome that, generally there's very little resistance. So this will end at the end of the month. So what I've done with it is I've kept that 110, 120 call. I don't want to roll it. We've taken some profits along the way because I don't know if we're going to get to 115, 125. So I like the delta that we currently have. So if we go to where we started, and that was on the 19th here, our net delta was 21 approximately. And currently, our net delta is 28. So I like the net delta expansion here. If they both get in the money, of course, by definition, the net delta will be zero because they'll both be at 100. So that is what I'm watching for. The theta continues to be minimized through the short that we have. So for me, this is just the right mix or the right balance between risk and reward. Okay. All right. This was a very long video. I hope it was informative. We're back with our next market update, excuse me, with our next market chat tomorrow, in just about 24 hours from now, 1 p.m. Eastern. I hope you can join us then. In the meantime, enjoy the rest of your weekend. We wish you profitable trading. Very best of health. We'll see you soon.